For the session of the 3rd of April 2021, Precipio Inc. stock ran up a gain of 171.98%, and price broke through the 50-day moving average of $2.28 on above average volume. You can see that it's 333.5 million shares. That was above average. It opened at $1.84. Moving on, it also crossed above the 50-day, 200-day moving average during that session as well. Currently has a market cap of $89.8 million, 18.133 million shares outstanding. Everything is currently bullish on the stock. Everything is currently bullish. It's currently overbought. Price rate of change bullish. Slope is positive. MACD histogram above zero and rising. 14-period slow stochastic oscillator above zero and rising. MACD above signal line, momentum bullish and rising. The news out there is Precipio launches COVID-19 antibody test kits on Amazon, and shares climb. It says shares of the company rose almost 50% during the recent morning trading. That was the morning of the 3rd of April. The medical diagnostic company said it holds the exclusive rights to distribute the product on the platform. The 20-made COVID-19 test kits, which is being manufactured in the US by Imadas Biotech, secured emergency use authorization in December 2020. So even before then, there were other news that was associated with the company. So that's the same news. As of the 26th of April, it has this news. The company announced that recently they contracted and analyzed revenues from signed customers for its HemeScreen POL physician office laboratory testing system exceeded 750,000, and for the reasons set forth below. By 4th quarter of 2021, this cohort is expected to result in expected reported quarterly revenue with an annualized run of $1 million, with an additional pipeline of over 30 prospective covered customers worldwide. Precipio currently reaffirms its forecast that products revenues will reach approximately 50% of pathology revenue by the 4th quarter of 2021. The annualized reported revenues from the cohort of current signed customers are expected to increase by $1 million In addition to the coming months, the HemeScreen offering is anticipated to broaden by the introduction of additional panels for others of other types of cancer. If successful, this expansion will improve patient care while producing meaningful financial benefits to customers and to Precipio's bottom line. So as much as we can, we include all of these news for you. You may have already heard about and read about all of this piece of news concerning Precipio, and the trend analysis is that it appears to be in a strong bullish trend. 200-day moving average is upward sloping, and the MACD histogram is above zero and rising. It is outperforming the S&P 500. Momentum for Precipio is strongly bullish. The 14-period slow stochastic oscillator is rising as investors begin to pay higher prices for shares. We showed you that 14-period slow stochastic oscillator. That's what that says. It's rising. It doesn't indicate it's overbought, but the RSI is indicating that the stock is overbought, but the 14-period slow stochastic oscillator is not indicating that. So the volume for that session was heavier than usual, trading 333,467,000 versus an average of 2.9 million shares per day during the last 12 months. The unbalanced volume indicator is bullish. The slope of the indicator is positive and suggests that buyers are presently more active than sellers. The historical volatility for 10 days is 512.40%. So we can see its earnings are expected on the 13th of May. So all of these, there's even more and more potential for the stock to even extend further. So, but all in all, we can see this, it ran up a gain of 171.98%. At some point, it was higher than that. It was up to 200% or thereabout. Correct me if I'm wrong. So easily, this stock is fundamentals are absolutely excellent, but the technicals are the issue now. So the issue is, do you buy now? The stock has run up a gain of 171%. Is this the right time to buy? I was easily say no. This is not the right time to buy. The train indeed, unfortunately, has left the station. So we can see what's going on here. For all the 10-day averages, or rather the standard deviation ranges for the 10-day trend line, 20-day trend line, and 50-day trend line, the stock has easily extended all of those ranges. It's not trading in any of those ranges. The 10-day, which should be the closest, it's not trading there. It's trading probably in the second standard deviation, implying that the risk has increased for the stock. It's gradually approaching tail risk territory. Easily a stock that run up a gain of this amount, I can even conclude that it is in a tail risk territory. So you really have to be careful. I would really caution, hold on, see what it's going to retrace in the coming sessions, so that you can buy and enter or initiate a position there. So, but I know it is too tempting to resist at the moment. But I wouldn't really say you have to jump in now. After it has run up 171.98%. So that's really caution. So fingers crossed. Hopefully it will consolidate or pull back. I know that in the coming days, in about roughly less than 10 days, the earnings are expected to come out, and that could also be another reason for the stock to run up yet more gains. So I'm also, unfortunately as well, I can see we have bid and ask prices that are even much more higher than what we're talking about. So we have a bid ask of 6.76 or thereabouts. So the stock has probably extended further in the aftermarket. So you really have to be careful if you really want to get involved. If you have to really get involved, I would advise, don't put all your money in this stock at the moment. Just allocate a small amount of money first of all, and see if it's going to retrace for you to, act accordingly or thereabout. Okay, so if you're new to this channel, subscribe, like, and share. If you're already a subscriber, thank you very much for watching this video.